Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about AUDUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what do we see? Well, here on the monthly, the first thing that we can see is that we have a market which is currently testing a quite strong monthly demand and support area. From here, all this previous rejection to the upside was created. The market has just tested again the exact same zone, started rejecting it to the upside. And in a situation like this, we could expect more bullish continuation to be created away from the level, as already happened in the past when the market tested this area right here. Now, dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, we can see how this market just shifted from a weekly bearish market to now a weekly bullish market. In fact, what we can see is that the market clearly was creating lower lows and lower highs. Now the market shifted to creating higher highs and higher lows. Now that is the definition of a shift from a bearish trend to a bullish trend, because when you have a bearish trend, you have a series of lower lows and lower highs. However, when then the market shifts back to a bullish market, you have a series of higher highs and higher lows. And that is exactly what just happened here. We can also notice that the reversal pattern in this case was precisely in inverted head and shoulders. With the left shoulder here, we also had the head here, and the right shoulder was just created at this level 2 weeks ago when the market tested its zone and started rejecting it to the upside. Now, in a situation like this, then the next move, the next logical move that we would expect from this market is first to get a correction and then to get more bullish continuation, essentially creating a new higher low, higher than the previous lows, and then a new higher high, so essentially higher than the previous highs. So continuing that uptrend that I was previously explaining. Now, if we drop down on the daily time frame, what do we see? Well, from a daily standpoint, I did speak about AUDUSD quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection to the upside. And then again, after this impulse, I explained all the reasons for which we could expect first this correction and then the continuation to the upside for the creation of a new daily higher high. And again, that is exactly what the market gave us. And by the way, I will link in description those previous analysis so you can go and check them out for more free education. Now, before we continue with the technicals here from a daily perspective, let's first go and see what we have when it comes to the commitment of traders, so what hedge funds, so the big players in the market are doing precisely for the AUD. Now, what we can see here is that with the last reports, net positions have been increased quite a bit. We went from having the low here at minus 96.9k net positions, in which institutions to have such a bearish positioning had way more shorts than longs. We had in fact 133.7k shorts compared to only 36.7k longs, and now we're sitting at minus 70k net positions. So we definitely had an increase of the net positions, showing how institutions are moving back to the bullish side for AUDUSD. In fact, we can see a massive amount of shorts getting closed, going from 137k at the high to 103k right now, and an increase of the longs from 28.1k at the low to now 32.7k. So clearly, institutions are starting to move back to the bullish side for the AUD. And keep in mind that all currencies on the spot are traded against the USD. So if we're checking the data for the AUD, we are actually already checking AUD USD. Now, moving back to the technical side of this market, what we must notice is that at the moment the market is trying to break new structure. This is now previous daily resistance that if and only if the market will manage to break to the upside, at that point it will be turned support. So we don't know if the market will successfully complete this impulse to the upside, but if it does, at that point, this previous resistance will become support here. And after the break, on the retest of this previous resistance turn support, this is where we would have very good probabilities of seeing more institutional longing, which at that point would further increase the probabilities of a potential rejection to the upside away from this level. At that point, since we would have an impulse and a correction, we could also measure the correction by taking our Fibonacci from the low to the high of the impulse leg, and depending on which Fibonacci level will be aligning with the previous resistance turn support, that will create confluence of support because we will have both the Fibonacci level and the horizontal structure both lining up at the same area, and having a confluence of support area increases the probabilities of institutional longing, which at that point in turn further increases the probabilities of a potential rejection to the upside for the completion of that impulse correction and impulse pattern to the upside. So if we get this impulse and correction, how I could be approaching a potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what I could be doing potentially is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to a bullish market and provide to me one of my valid entries, at that point I could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which is linked both in description and in my bio. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns and the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that you have the possibility to join in order to gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible, and I will see you in it. If you enjoyed the video, make sure to drop a like, and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.